In today's video, I'm going to take a look at gold. There are a few signs that gold may have put in a slightly short intermediate cycle low right here in late June. So the first sign that a possible low has been struck right here, an intermediate, a larger degree low, intermediate low, is that the RSI is starting to behave like it typically does during the advancing phase of an intermediate cycle, and by that I mean it's starting to get embedded in the overbought condition. That usually doesn't happen during the declining phase of an intermediate cycle. So here's the declining phase of an intermediate cycle right here. You can see that RSI never really got heavily oversold or embedded, overbought or embedded in the overbought condition. Once the market rallies enough to tag overbought, then another leg down starts. Same thing during this intermediate decline. Overbought conditions are not held and not embedded in the overbought condition. So that's the first sign. And if this is, if I'm correct here, and this is an intermediate bottom and not just a B wave bounce, and let me clarify, most intermediate declines, again, not all, nothing's 100%, but most will unfold as an ABC correction. So that's the one, maybe you could say, fly in the ointment, is that we don't really have what looks like an ABC move into the intermediate cycle low. So it is possible that this is a B wave bounce, and price has to come back down and make a lower low before this intermediate decline is over. But this doesn't typically happen during a B wave bounce. If an asset's still in the declining phase of an intermediate cycle, the B wave bounce will top and start down pretty quickly once an overbought condition is hit. So the assumption at this point anyway is that when RSI gets oversold down here, that price is going to start to rally again pretty quickly, as you can see happen during this intermediate rally. We actually only had one brief oversold level here, and the price ricocheted off of that oversold level and started another leg up. All right, switching over to the weekly charts, you don't typically see 4 up weeks in a row during an intermediate decline. 2, maybe 3, and then the market will roll over and start back down. So we've had 4 up weeks in a row, and we've had our first test of the 10-week moving average. Again, that's not generally what you see if a market, and especially gold, is in the declining phase of its intermediate cycle. And you can see here we got pretty heavily oversold, and our bottom, well, the lowest low occurred on week 16. That's a little early. I usually don't expect a bottom until week 18 to 25. But it is possible that you can get a slightly short cycle. And again, what it looks like is we've had our first test of the 10-week moving average, and usually that first test will get rejected. Here was the first test coming out of this intermediate cycle low. You can see it got rejected. Moving back to the daily charts, you can see we've also had a test of the 200-day moving average here too, and this was a prime target for the cartel to attack and try and stop the gold rally. They tried desperately here at 1800 to stop the rally, but the bulls kept showing up and defending against every one of these attacks, and then finally price rallied enough to test that 200-day moving average. But this a prime spot for the cartel to come in and attack again. And options expiration is always a great day for an attack on the metals. So not entirely unexpected what happened on Friday. Now, I will note that the attacks have been much more severe in gold and again on Friday in silver. Uh, I think I think the cartel is kind of running out of uh, ammunition in the gold market itself, and so they're hitting the mining stocks and they hit the silver pretty hard on Friday, trying to uh, bring down at least 2/3 of the metal sector in the hopes that they can keep gold contained. And the reason, obviously, the reason there is this manipulation of the gold sector, it's the canary in the coal mine for inflation. If governments can keep gold suppressed, they have a better chance of keeping the rest of the commodity market suppressed and keeping inflation in check. Uh, we've got a real inflation problem right now. The problem is um, the banking cartel has kept gold suppressed ever since that top back in August, but the rest of the commodity markets are just not listening. This tactic worked really good from 2011 and until just recently. Um, we had the big attacks on gold, and it kept most importantly it kept oil contained, kept it kind of pinned at and then below that $100 level as the government printed more and more money to keep the economy afloat and keep the banking sector alive and keep the stock market rising. Uh, Most of the QE they were able to keep that QE and money printing. They were able to keep that liquidity going into the stock market, into the real estate markets, and for the most part, kind of stay out of the commodity markets. But after the bottom last year in March, they have not really succeeded in keeping the commodity markets in check and keeping inflation in check, even though they have been able to keep gold suppressed since August of last year. Um, but the rest of the commodity markets are not really paying attention to the metals market anymore. So uh, this is the obvious reason why we have so much manipulation in the metals market. Now I'm gonna make a call, and I made this call in the stock market several years ago that 10,000 was going to be a piece of cake, and of course now we know, the Nasdaq Composite is closing in on 1,500, and at the time I even said that 20,000 wouldn't be out of the question, and it's starting to look like there's a pretty good chance that the Nasdaq will reach that 20,000 mark before this bull market is over. So the call I'm going to make is that $50 silver is going to be a piece of cake. Now, it's not going to be, it probably won't get there as fast as everybody would like it to. It's going to be a difficult move to get there, but I think you can almost bet the farm that it's going to get there. And I'm not talking 10 years. I think it's going to get there. There's a chance that it might even get there this year, but I think by um, next year for sure it's going to get there. And and I think once it does, and once silver breaks out above that $50 resistance that's uh, has been holding it back since 1980, then I'm going to say $200 isn't out of the question, and maybe uh, considerably higher than that. Although a big chunk of the gains in silver will occur during the last 2 months of the bull market. That's just how these bulls tend to work. It could take 4 years to get to $100 in silver, and then it could go from 100 to 400 or 500 in literally in 2 months. Um, but I think if you buy, my preference right now is to buy physical silver. The more physical metal is taken off the market, the harder it's going to be for the cartel to continue to manipulate the metals, and it's just going to be easier to hang on to during these um, what is going to be countless attacks on the metal and especially silver along the way. It's going to be much easier on your mental capital if you're holding physical silver than if you're trying to trade these markets. These attacks tend to get people very bearish. I saw uh, on Friday, even though gold really wasn't even hit that hard, they did hit the miners and silver very hard, and that got everybody very, very bearish on the metals again. And that's just how metals bottom. Um, it never looks like a bottom. Uh, this double bottom right here, people were extremely bearish at this double bottom, expecting a breakdown and um, calls for $1,200 gold again right here. And then what happened was it turned around and we had a nice intermediate rally. So I'm seeing lots of bearishness, especially after Friday's attack on options expiration. But the signs are there, in my opinion. And one more I did forget to include. All right, these are the Bollinger Bands. Generally, when an asset is still in the declining phase of an intermediate cycle, the Bollinger Bands, both upper and lower, don't generally turn up, and price doesn't generally close above the upper Bollinger Band, which it did right here. That's usually a fairly dependable sign that um, an intermediate advance has begun. So my assumption right now is that we've probably started the advancing phase of an intermediate cycle. The cartel is going to fight this all the way up. They fought and fought to stop gold from um, getting back above 1800, but right now, I think once RSI gets oversold, that's probably going to be a buying opportunity, and the price should probably start to rally again pretty quickly once that oversold condition is reached.